Okay, folks, welcome to Thursday Night Stock Charts Live. What we're going to be talking about tonight is gold. We have other topics we're going to talk about as well, but primarily it's going to be gold. We're also going to talk about the enthusiasm in the market and how it appears that we're ready to move into a parabolic blow off top in the equity market. So we'll be talking about that. We're going to be talking about the weekly charts, perhaps some monthly charts as well, to support why I believe that in all probability we are going to move up higher here, and how it's probably not going to end all that well. So let's get to it. Before we go into tonight's topics, I got this out late, so if you're a member of the forum, please enter your symbols in the poll. I literally just posted this, and I'll go over your symbols tonight. Franklin's in there, good. And if you're not a member of the community yet, use that link below, and you will be entered for free, no charge. Why can't I paste this? Oh, here it is. There you go. All right, let's say hello to folks. Franklin, welcome. Thank you, sir. Thank you. Tim. Evening, Bob, down here in Rotunda in the hurricane, but still listening and watching. Power broker. Love that. How is the storm? Did they declare it a hurricane yet? I haven't been keeping track of it. Be safe, my friend. That's right. Sean's down there too. Are you in the thanks for the shout out and the audio check. Are you in the storm as well, Sean? We got Tim that's entered. Good. All right. So they're populated. All right. So be safe. All my friends down there, be safe. And let's get to tonight's show. All right. Let's begin with the economic data that came out this morning. And that was the GDP report for Q2, the revision. Where is it? Here it is. All right, so we came in with a GDP growth of 3% on a quarterly basis, but it seems like it's been on an annual basis this year. So, I look at these reports and I says to myself, why are they cutting rates? If we have an economy that's growing at 3%, you would think that they would be raising rates, not cutting rates. What happens if, since we're not in a recession and the economy is growing gangbusters, well, what happens if we do go into recession and we need all those rate cuts that they're already tossing out like nickels and dimes? So something's wrong. Something is very, very wrong here. And I just don't think we're being told the truth with regard to GDP growth, with regards to jobs data. They've already admitted they lied about the jobs data. They missed by over 800,000 real jobs over the course of a year. Yet the stock market has kept going up when those numbers were reported as good news. But when they were taken away, stock market did what? It went up. We're at all-time highs. So, just sticking with today's economic data, initial jobless claims, it's a weekly number. That came in better than expected. But you take a look at durable goods, they were flat. They expected a negative number, but they were flat. So let me get this right. We have GDP growing at 3%, yet durable goods were flat. I'm sorry. I just don't buy it. I just don't buy it. But next week, we're going to get the jobs data, which comes out. And that will be a very interesting read of the tape on how the equity markets behave on that news. Now, tomorrow, we're going to get some inflation data. I don't think this is going to mean much. The only thing that could derail the market is, of course, a hot number but a number that is driven hot by either wage gains or by housing. Because we know it's not energy, we know that it's not agriculture, we know that it's not the commodity market. So it has to be something else. And usually when rents go up, they stay up. When wages go up, they usually stay up. So I don't expect any type of deflation on that front. So a lot of economic data coming up in these next several trading days. And then, of course, we get earnings. Now, keeping with the GDP growth of supposedly 3% in Q2. The other day on the 24th, we had this is out of the Richmond, which one was this? 5th District. I forget. I want to say the Richmond Fed area. This is published by the Richmond. Let's say it's the Richmond Fed area. Manufacturing survey. Think about this, okay? Just riddle me this. Bear with me. We have GDP growth that came in at 3% on durable goods numbers that are flat. However, the manufacturing survey has hit lows not seen since, I don't know, 2021. You know, sometimes you just can't fit a round peg in a square hole. Something's not right here. Valuations of the market. I don't know why this is not loading properly. Let's try. There it is. We're nearly 37 handle on the Shiller PE ratio. And when you take a look at the Buffett indicator, we remain strongly overvalued and still trading above the 2 standard deviation Bollinger Band, extremely stretched on valuations. I'm telling you right now, this round of earnings had better be gangbusters because it's already priced in. Good earnings data is already priced into this market. So earnings and especially guidance had to be like that. It's got to be perfect. Fed Watch tool. Now, last night when I did market wrap, they were beginning to price in. It was still at 0%, but they loaded this chart up in preparation for a 4 basis point to 4.25 basis point rate cut. So that means they would price in for November a 75 basis rate cut. Now, if the PCE index or inflation read comes out weak tomorrow, they may throw that back in there. But if it comes out hot, you can forget all about it. So at current, the markets are still projecting a greater than 50% odds we're going to get another half basis point rate cut in November. But GDP is growing at 3%. What don't we know? Might this have something to do with it? Unrealized losses by the U.S. banks. I've shown this before. But I'm like an investigator. I need to understand the whys of what they're doing. Now, it could be simply political. Jay Powell's a Republican, but that doesn't mean he's not going to do the bidding of the Federal Reserve, and they want to remain their independence. So they will help whatever president's in office to stay in office because they don't want to become targets of the next administration. So what do? They help the guy out. In this case, gal. So that could be the reason, or it could be the fact that the U.S. banks have 7 times greater a financial loss than they did back in 2008. Think about, for those of you that are out there to remember the financial crisis, things got real fast and real bad. If this ever fired off, would eclipse banks would be going down. They would have to let some go down. There won't be enough banks out there to buy up the existing banks to prevent a collapse. They would need to cleanse out the system and start all over again. But they don't want to do that. It's easier to kick the can down the road, print money, and wait. Now, we have an election coming up here in a few days, and they are pulling out all the stops. Mark Cuban, who I never really liked all that much anyway, so it's no big deal to me. No great surprise. But Mark Cuban, the mainstream media is truly leans right. I was going to play the video. Let's do it. Let's play it. Let's hear good old Mark make the case.
What's the impact?
But there is a critique that actually she will say whatever the audience wants, right? I mean, we look at the tipping, the tipping thing
right.
that took place in Nevada. Given some of the details that we don't have on certain things, is that because some of those details would be less favorable in certain audiences?
Do you see the Elon quote? I don't know what you think of Elon, but
I like Elon.
I like Elon too. But she was at 28% favorability,
right.
And then, as you say, things change. She's all the way up to about 50%. I would just argue that filling in the blanks does not account for that move, and that the media coverage has been so positive and almost marked that it's like, we don't have to worry about trying to elect this guy who is clearly not up for another 4 years. And it's not Donald Trump. So they would have, the left and the people that need a candidate would have embraced anyone at that point. And, you know, ABC, it was 100% positive coverage of her, 92% negative of Trump. So Elon says,
so
what changed the media coverage?
Okay, first, what's the most watched news channel? Who are the most watched and viewed and listened to podcasts? Who are the most watched and listened to or
Is it
viewed?
Fox?
Yeah.
Yeah.
Right?
Okay.
I mean, it's not close, right? The number one shows are all Fox. The number one podcast,
So
right.
Even in spite of that, she's been able to...
Not in spite of that, meaning, well, in spite of that, yeah. Okay. Meaning the mainstream media is not who you think it is. The mainstream media truly leans right.
Maybe that's why it's only tied then.
Well, maybe, right?
Well, you could be referring to the new, it's not mainstream media. If you're calling guys like me, which I'm a pimple on Joe Rogan's ass, but if you're talking about podcasters like the Rogans of the world, Tim Sykes, Salty Cracker, my man Salty Cracker out there, yeah, we totally lean right, but you can't argue that the mainstream media is still, in fact, the New York Times, Washington Post, MSNBC, CNBC, and yes, Fox News, of course, and CNN. What outlets have they debated on? CNBC, not CNBC, ABC, and they haven't gone on any podcasters show to do a debate. Why? Because they can't control the outcome. They can't get Camilla the questions prior to the debate. So it's too fair of a playing field. So no, Mark, the media does not lean right. They had the power of the debate. And what did they do with it? They fact-checked Trump, and they didn't fact-check her. So they leveraged the strength of their monopoly or duopoly on debates, presidential debates, and they made an infomercial for her. So clearly, Cuban is in the tank for her. And then when you move on to, and I don't want to make this political, this has to do everything financial. And the reason is this, is that where is it? Did I lose it? I think I lost it. You had God damn it. Here, let's do this. You had Here.
Really listen to her.
Andrew Ross Sorkin making the case that Camilla's, whatever her plan is, all we know is that she wants to raise taxes. Other than that, you have no idea what her plan is for the economy except to redistribute wealth. What does this numbnuts have to say? Where did he write for prior to CNBC? New York Times. Andrew Ross Sorkin, go.
In truth, if you really listened to her yesterday talk about taxes, you know, who's going to try to balance the budget or get closer to that? She is. She talked about higher corporate taxes. Clearly, she talked about higher taxes on.
The last thing that any hike in corporate taxes is going to do is going to go towards the debt. That's the last thing that's going to happen. It's never going to happen. And I would argue, even with Trump, it's not going to happen. But at least with Trump, what they're going to do, he knows he's got to create a bigger pie. He's got to grow the GDP exponentially so we grow our way out of the debt, much as what we did after World War II. Let's go back to this numbnuts.
The very wealthy. Now, that may make the very wealthy frustrated or upset, but she also said something very interesting. She said, I'm not against them being wealthy. I'm not against success. I just want to figure out a way to tax the system in a fair way. And I think that to some degree, resonated. Now, I'm sure there's going to be some selfish folks out there who are super greedy.
Selfish folks. You know what happens when they raise taxes on corporations? Our prices go up. Corporations don't pay taxes. Those taxes are passed along to the consumer. That's what this guy, who he knows it, he's a smart guy, but he won't tell you the truth.
Who don't even like the idea of it. But I just think that when you start to think about what is the more practical approach to all of these things, she definitely laid out her case, and I think it landed to a large degree.
Yeah. Landed in a pile of poop. Anybody that has to say when they're running for president, I'm a capitalist, is a communist. You don't have to state it. You do it with your actions, and none of her actions imply that she's anywhere near friendly towards capitalism. Exact opposite is true. She is a Marxist. She wants pure government in control of everything. That's why they're importing voters. Tim, cat 3. Okay, it's not horrible, but not great. Okay. Sean, you're in that too. Okay, be safe, my friend. DZ Burton, welcome. Apparently China's pushing stimulus checks. Yeah, they're going down that road. Yes. So another theory that I have about, and we'll talk about this in a moment, about what's going on, I already alluded to it, is that when I got to play this for you.
What's the first word that pops into your head when you hear the name Kamala Harris?
Liar.
Out of the mouth of babes. So I think what we're seeing, as a matter of fact, I have a chart I want to share with you. So yeah, we have big tech in Beijing's bazooka spark surge in stocks, gold, crypto ahead of PCE. I own Coinbase and Bitcoin. Great day. Awesome day today. But I want to show you this chart. Where are all my charts? Here, let's go back here. Here we go. Okay, so Switzerland cuts rates third time this year, 25 basis point move to 1%. Switzerland's at 1%. Sweden cuts rates third time this year, 25 basis point move, 3.25%. So the yields in Switzerland and Sweden are measurably lower than ours are. Czech Republic cuts rates for the seventh meeting in a row, 25 basis point move to 4.25% in the neighborhood of where we are in Fed funds rate. So look at all the global cutting that's going on. This despite that we remain in an inflationary environment. You can talk all you want about the Federal Reserve saying the trajectory for inflation is down to 2%. My reply back to Jay Powell is, you never made it to 2%. You never made it. It was your mandate to get down there. That was your goal, but you never made it. In fact, what you did is that you went by a corrupt CPI report, which no longer includes skyrocketing prices such as coffee. You don't include that anymore, yet you're claiming victory on inflation, though it never hit your 2% target. And we also have, Jay, hello, Jay. Yeah, we also have a 3% GDP growth, yet you're going to cut 100 basis points within a month? Give me a break. It's either politics or the other logical thing is that either A, there's something there's two other things. There's something very, very bad out there, whether it be the banks, I just showed you the chart there, or B, the entire globe is going into a rush for an inflationary spike in their equity markets. And what the Federal Reserve is doing, because if you have Switzerland down at 1%, their stock market's probably doing pretty good. You have the Europeans, which are cutting rates because they're, as a matter of fact, I have this, unless I closed it out again. Here. So you have German unemployment is shrinking at the fastest pace since COVID. So Germany is the EU. As goes Germany, so goes the EU. So they're going to need to be cutting rates. I think that what we have is a rush to save the equity markets, a rush to seek capital to keep this party going. Because I don't think they can afford to let this party stop. Because what happens when the equity markets blow up? Well, what happens to the capital gains that's supposed to be going to the federal government and helping pay down our debt, which you know is not going to happen? Well, that dries up. And they still have to keep borrowing and borrowing and borrowing to keep the party going in Washington, D.C. So they have to keep this party in the stock market alive. Or else it becomes a budget buster for the federal government. He is, right? Out of the mouth of babes. Why does Swiss franc always do well versus the dollar? Is it because the BIS is there? The BIS is Bureau of International Settlements, for those folks not familiar with that acronym. No, it's not that. The Swiss, they did something a few years ago. They diverged. They're not a member of the EU, but they diverged from the EU in the way that they handle their monetary system. Yeah, they started buying U.S. equities. They started buying stocks over there. And so I don't know whether or not they're still doing that, but they're doing things different over there. They also changed the way their currency floats relative to the euro. So I don't know the exact reason to answer your question. I doubt it's because of the BIS being there. It's just for a whole bunch of other different reasons. Perhaps they just simply don't have the debt and they can keep that interest rate that low. But you would think that given all the banks that they have there, you want to have a higher yield to attract more money, but maybe they don't need the money. So not quite sure, 100%. I can only speculate. All right. So we went over Germany. I'm completely going out of order here tonight. So I want to talk a little bit about, because we're going to talk about gold in a moment. We're going to talk about the weekly charts in a moment. But before we get into the where I think equities are going, because I do think that they're going up. And I added long positions the other day and even added more today. Still have shorts on, but when I'm not as short as what I was. I'm probably going to, if we break out to new monthly and quarterly higher highs, I'm probably going to have to cover much of our short position, get long, and just use a trailing stop loss order, enjoy the blow off top. I've seen this before. I've been down this road 2007 into 2008, and not as big of a blow off top, but the COVID bull market, I think that's probably where we're going. And when it ends, you're going to know it. You're going to know it because it's going to end like that. And you're going to hear a lot of people, read a lot of people on Twitter saying, with all-time highs, what are you talking about a bear market? Folks, every single bubble that's ever popped over the past 30 years has been preceded by an all-time high in the equity market. 2000, 2007, 2020. I didn't make it up. It's like that. It was like that when I got there. So when you're taking a look at the equity markets and where they're going now, they're going to a very, very dangerous place. This is from Global Market Investor. Investors have never been so bullish. Investor allocations to hit 61%, the highest level in at least 40 years. This has almost doubled since 2009 and is in line with the 2000 dot-com bubble levels. I traded in 2000 and the optimism was ridiculous. Frankly, I find this hard to believe. It was far more optimistic back then than now, but I was also a doe-eyed kid. So I looked at things a lot more optimistically back then. Now I'm a little bit more skeptical. At the same time, allocations to bonds is at a 15-year low. We were buying bonds earlier this week. Why? We're going to go to the reason why in a moment. So to illustrate what this looks like on a historical level, the bullishness in the equity markets, here's a weekly chart. And you can see that this upper band here in red kind of is the demarcation line of where, you know what, this is getting a little bit frothy, a lot frothy, in fact. And we probably don't have all that much more room to run to the upside. And I've never checked this out, but I want to go back and I want to go use a quarterly chart and see where we are relative to other bubbles. Let's play a game. So what I just did is I created a range at which you have a mean, the lower band, and I'm being really, really, really conservative here. I think it's higher, but we're going to go conservative here. And the upper band here marks the all-time high. And let's do this. Let's take out our crayon. If I could find my crayon, there we go. I only do this for a living. There's the high back in 2000 for the S&P 500. Doesn't look right. But that is the high because we sloped down from there. Where's 2007? The high there. And where is 2020? Here. That was the beginning of the year. We collapsed. The market peaked out here. So these are the prior peaks on a quarterly basis for bullish sentiment. And many of you out there that are new to trading, or you're not really into it that much, you're just getting into it now, you may be saying, well, it sounds counterintuitive. Why are you considering a high level of bullishness to be a bearish thing? It's because it simply is. It's an overcrowded trade. Too many people are bullish. They're not looking at the warning flags as we do here, and they're just throwing money at the market hand over fist, thinking that they're missing the train. They're YOLOing. They are FOMOing. Whatever acronym you want to throw at it, it doesn't end well. So we know what happened back during these time frames. Now, where are we at relative to prior bubbles? We're here. We're above where we were in 2007. We're above where we were during the dot-com bubble. Think about it. We haven't hit what I would call an extreme overbought level yet. This can still head higher, but the quarter is going to end in 2 days, 2 business days. So this is pretty much in the books unless we collapse tomorrow, which I doubt. I have this up here, super micro. I think this is going down to around 250, so I wouldn't touch this. We're watching it under investigation for by the DOJ, and you never want to be in their scope, so I would not buy this stock. It's going lower. Now, let's talk a little bit about gold. The chart's gone. So, if you had to hazard a guess, what's outperforming on the year so far? Is it gold, or is it the S&P 500? I'll let that sit with you for a moment. What the hell's going on here? And here you have it. Gold is outperforming the S&P 500 by 8% on the year. And while it looks as though the S&P 500 is going to continue up higher, I think that gold has far more room to run on a relative basis. In fact, let's go to gold's monthly chart, and that month ends on Monday. In fact, for giggles, let's do this. Let's do a yearly chart for gold. Amazing. Quarterly chart. Gold is up over 30% now on the year. 15% of that gain came this quarter. So where do we think that gold is going to go? We're there. We are at a major resistance level on gold. So I would be very careful here with initiating new positions. I own gold. I own the physical safety deposit box, and I'm not selling it anytime soon. But we are up at quarterly resistance levels on gold. You just saw me draw the chart. As a matter of fact, we'll bring it up on TrendSpider to validate if they have that data. Let's bring it up. We'll use the GLD. Quarterly view. I used to have a white background, so I have to change this. Yep, it's validating. We're right at resistance right now on gold, folks. So be careful. Be careful with initiating new positions. Now, on a relative basis, gold versus yields, correlation, no correlation whatsoever to yields. So for those folks that are saying that gold can't go up when yields go up, it's ridiculous. It can go up. As for the U.S. dollar, the dollar correlation is clearly inverse, but it's not as uncorrelated as it was back here, back in 2021, or back here in 2016, or back in 2008. Forget about it. So both of these have been holding up pretty strong. The dollar's been flat for the past couple of years, but gold is just now blowing the doors off of the U.S. dollar, because gold is the only real money. And I think that while we may get a pullback on gold, I think that pullback is to be bought. It could be a multi-month pullback. Here is the monthly chart. We are nearing the third standard deviation Bollinger Band on gold. So while I love the trade here to the long side, we have to say to ourselves, we're nearing an area where we could be in a little bit of danger. Now, what would be very, very good, going back to the quarterly chart for a moment, here, is if we blow through and close above this upper band of resistance by the end of business on Monday, then next quarter we pull back and we retest. In fact, we trade down below this lower band of support. Then by the end of Q4, we're trading back above that current resistance level. But if it closes back above it, that will then be validated support from which we could break out of. And that sets the stage for the continuation rally in gold. But I think that has to play out first. I don't think that we just go galloping through this resistance level. It didn't do it back here during the end of this bull market. Didn't do it back here at the end of this bull market. So I wouldn't expect anything different this time around. Now, there's another way of ascertaining where gold goes in the future. You could take your prior lows and you could do this. Actually, that doesn't help. Let's do this. Well, we're right there, man. By any metric, we are at pretty serious resistance on gold. Be careful, folks. Be careful. And it could just trade sideways here as well, much as it did back here for about 2 or 3 years. Actually, 2 years, and then it broke. All right, what else do we have? Silver. So silver is hitting multi-year highs, and here is the silver gold index relative to the S&P 500 ratio chart. And you can see that this bad boy, let's get rid of all this noise. As a matter of fact, I don't even want the weekly chart. I want a monthly chart. This bad boy is getting ready to rip. Make it nice and clean. So here's the weekly view. We're breaking out at current. Monthly view. This is a beautiful setup. Absolutely beautiful on the XAU, that's a silver and gold index relative to the S&P 500. Now, both can go down, but gold and silver can go down less, and still this chart goes up. That's a ratio chart. It's just a relative basis chart. And we have a monthly breakout on silver and gold relative to the S&P 500, which ironically just made new all-time highs. Let's take a look at silver for a moment. Monthly view. I think this has far more room to run than gold at current. Far more room. So I think that what we need to be doing here is not talking so much about, is it time to buy gold? The question is it time to buy silver? Silver looks to be the far better risk reward play than what does gold at this point in time. Now, at current, on this monthly chart, we are just barely above a monthly long-term resistance level. So let's see if we close above it. I already own silver. I want to buy more, but I only want to do it on a breakout. I don't want to buy it into resistance. So we'll wait until Monday to see how we close before we add more to silver. We have somebody from Twitch. Hello, sir. Thanks for your knowledge. And what should an investor do who has all in S&P 500 do? Would moving to money market be a good call or something else? And when just estimate? Well, that's a good question. So it depends upon a couple of things. You know, and first I have to say I'm not a financial advisor, but I'm going to give you my opinion. It depends upon your time horizon. If you're a young man or woman and you have many years left to go before you need that capital, then you may want to take a portion of the S&P 500, set up a trailing stop loss on it, and get stopped out, but enjoy what I believe could be a parabolic blow off top. So if that's the case, then you want to enjoy as much of it as possible. And the way to enjoy that parabolic move up higher is to use a trailing stop loss order. How much money are you willing to risk? How much money are you willing to lose? You want to use a 5% trailing stop order, 3% trailing stop loss order. You don't want to keep it too tight, but you want to keep it tight enough where you can catch as much of the upside as you possibly can. And here's what I mean. Let's take a look at the S&P 500 going back on a monthly chart. Now think about if you had a stop loss in, like here. I don't know if you're a technician or not, but what you could do is either use a trailing stop loss order or take your crayon out and just draw some trend lines. Now, we can do this current state. I'm going back to another bull market. And you could say, okay, where am I at on this ascending wedge formation? Am I at the top? Am I at the bottom? And if I'm at the bottom, at what point do I want to get stopped out? Obviously, if you close down below this lower band of support, and when we did that back in 2022, we went into a bear market. You could also put it into, what was the last, here, we'll use this one here. This is, let's go with 2007, 2008. Same deal here. Wouldn't have been great had you been able to stop out on a failure to hold this lower band of support. You know, yeah, you would have missed some upside here, but let's face it, for 3 months you would have been kicking yourself on losing a couple of percentage points. But thereafter, if you were sitting in bonds and cash back here, you were whistling Dixie. You weren't thinking about, oh, I missed 2 months of upside gains. You're not going to care. So it's all about capital preservation. And where we're at this point in time, in this cycle, we're looking pretty good. I still think that we can head up higher. We can probably head up higher here. Now, if we fail to hold this lower band of support, I think you got to get out. If we close out the month below support, you got to get out. But we're not there yet. We're closing at the highs of the month. Unless we have a horrible Friday and Monday, we're closing at the highs of the month. Therefore, in your situation right now, I would, if I were older, I would perhaps take some off the table, buy bonds. The rest, I would let ride with a trailing stop loss order or a trailing stop loss order on half, and then keep an eye on your monthly chart. We break down below that lower band of support and we close there, you're out. You're in cash, you're in bonds. Because if the market goes into free fall, as it did back in 2007, 2008, 2020, 2000, then cash usually does well, bonds usually does well, natural gas does well. We did that on Sunday night. So that's what I would do. It depends upon your age quite a bit, though. How much risk are you willing to risk or absorb at your age? If you're young, I wouldn't worry about it all too much. You're very welcome. Anytime. Don't forget to join our forum. Love to have you in there. I don't have anybody from Twitch in the channel yet, so please sign up here. Become a member. It's free. I want your credit card number. Looking to build a community. There you go. You'll meet some great people in there. All right. Michael, hello. All right, let's go to, wow, it's 6:50 already. Let's go to the weekly charts and see how we're poised to close out the week. We did this. Skew index. Yeah, this is important. I went over this last Thursday, I believe. The skew index is a measure of speculation. It's a measure of bullishness, similar to the VIX, but the VIX uses nearer dated options or nearer priced options, where the skew goes out with out of the money options. Because if you're seeing a lot of volume in out of the money options, that's usually retail investors making stupid bets. And you saw that last week. I mean, we hit third standard deviation Bollinger Band levels. We pulled back this week, but that's just another measure of like the bullish percent index. There's an amazing level of bullishness out there. We are at highs on the bullish percent index higher than 2000, 2008, 2020. Let's just bring up price performance. S&P 500 above. So you saw spikes like this in the past to oversold levels, like back here. We spiked up on skew. Not a big move in the equity markets. I'm trying to see how much of a real correlation there is. You may get blips on the screen, but I'm not seeing horrific price action when we get to these levels. Let's go to a monthly chart. It's when the skew starts coming off. That's the problem. Much as with the yield curve. This was up 10 basis points. This hasn't updated yet. This is as of last night, the 25th. This should have come in a little bit today. But folks, the yield curve is just in fuego. Keep in mind, this is not calculated in today's price action. That has not updated yet. But we are trading well into a range where in the past we've seen calamity in the equity markets. Again, 2020, 2007, 2008, 2020. Okay, so this is one of my favorite charts. Federal Reserve has claimed victory on inflation. The only problem is the CRB commodity index is saying, I don't think so. CRB Commodity Index is breaking out of a major formation, a saucer with handle formation, and we've already broken out, and it's going up higher. This is a basket of commodities. Has anybody taken a look today at BHP Billiton, one of the largest miners in the world? On the week, it's up 13.25%. It's not because they're going to be charging less for their products. They're going to be charging more. Why? China. We're looking to buy BHP Billiton. Volatility on the week, down. No great shock. I want to see what it did on the day today. It was up at one point. It pulled back to close negative. Yields remain up on the week. Bonds, TLT down in the week. We bought some bonds early in the week. Let's go daily view here. Almost a bullish key reversal bar on bonds. Volume was light today. Tips. They're down in the week. They were up earlier in the week. Treasury inflation protected securities. The dollar now down on the week. It put up a really good showing the other day. In fact, I called BS on this move. I didn't think this was going to get a follow through. It didn't get a follow through. I think the dollar is probably going to break down. I won't say definitely, but probably going to break down. That's going to send silver and gold higher. But remember that resistance level on gold, quarterly resistance. We're there. Euro. This is why the dollar is probably going to pull back further. Euro making new multi-month highs. In fact, new multi-year highs. Yen down on the week, struggling for support, and they're cutting rates over there. Dow Transport. Basically, what the currency markets are saying to the Japanese, yeah, you cut rates, we rewarded you here, but you're not cutting them fast enough because inflation is out of control. So now they're going to have to hike up rates yet again. What does that do to the yen carry trade? It hurts the U.S. stock market. Dow Transport, a breakout. What did they do on the day? They were down the last time I looked. They did manage to close up on the day. They did do a reversal day at one point. Volume was good, but a lot of that was selling. Dow Jones Industrial Average. Let's get our crayon out here. Let's update this. Let's get rid of this. This can move up a lot further. Primary price target number one at about 43,000 on the Dow Jones. We close at 42,175. S&P 500 weekly view. New all-time record highs. Volume is horrific. Absolutely horrific. Let's go monthly view. We can go up higher. What was support back here in 2022 will now be the upper band of resistance on the S&P 500. Strip Qs, weekly chart. They broke out last week, did a retest this week. We got follow through. We've broken out on Stokes, RSI. Volume is horrific. Let's go monthly view. So this is what I was talking about earlier. We have a short position, which now I bought some TQQQ, which puts us long of the Qs to minimize or reduce the size of our short position. But let's face it, if we close where we're at current on the month, it's a hell of a breakout. So we're not going to be able to fight this. And these will be your upper bands of resistance. God damn it. Small caps, they're down on the week. Technology breaking out. Looks like I should say it has broken out. And I'll tell you what I mean when I say it's broken out. Broken out this way here. There you have it. Talent Ag, my boss came by. Have to watch the replay. I'll talk to you, Talent. What else do we have here? Biotechs. I lost money on this week. I don't even want to look at this chart. I'm pissed off. I put on a trade here. I got stopped out like that. It was like ridiculous. Consumer staples. This is a short. They could rally into a check back here, but they've had their bull run, and I think that is over. Let's go daily. Let's go monthly view here. Wrong chart. Wrong chart. Look at it. We're trading up and into the third standard deviation Bollinger Band. I think that in the coming days, coming weeks, XLP, consumer staples, is going lower. Home Rocks, you got to post any requests in the forum. There's a link in the forum. Sign up. It's not going to cost you. I don't want your credit card, but all the requests go into the forum right here. So use that link and just enter it here, and I'll go over it. Too hard to keep track of all these symbols. But yes, I will do it for you. All right. Michael, didn't you say the markets were overbought? It depends upon the sector. On a daily time frame, some are. Staples definitely are. Qs are not. S&P 500 daily time frame is a bit overbought. It depends upon the sector that you're looking at. Overall, is the Wilshire 5000 overbought? Meaning the entire. Here's the Wilshire 5000. Complete stock market. I rarely talk about this. Is it overbought? To To an extent, relative to the stochastics, yes, but it could stay overbought. Is this a strong chart? What are the probabilities? Rather than saying something is overbought, I would rather ask myself two questions. One, if overbought, is it unsustainable? Two, what are the probabilities given the candlesticks of higher highs? So let's look at this chart here and say, okay, I'm looking at this. I want to know whether or not this stock market's overbought. What are we doing here? We had a retest of 54.70 back here in August. Retest, actually, we broke out in August. Retest here. Sorry, scratch that. We broke out in July. Retest August. Retest number 2 in September, and we're at the highs of the month. Guess where this chart's going in October? It's going up. 2 trading days left to go. A lot can happen, but in all probability, this is going up. Now, looking at this and saying, okay, relative to my unsustainability metrics, meaning, are my stochastics historically overbought that they probably can't go up any higher? No. RSI, where's RSI? It's at nearly 71. Can it go up higher? History has told us, you darn right, it can go a lot higher. So by that metric, no, it's not overbought. Is it overbought relative to, forget about the 2 standard deviation, Bollinger Band and green. I use the 3 standard deviation. Are we overbought relative to it? Meaning an unsustainable move up higher? No. Therefore, the path of least resistance for the stock market at current remains up. For all of the reasons why I give you yield curve this, bullish percent index being so overbought, the chart's saying I want to go up. That's why I bought stocks this week. That's why I'm saying publicly I'm going to probably have to lighten up on shorts because I don't want to fight it. At some point in time, because we were wise enough to say, okay, you know what? I'm not gonna fight this market. I'm going to take a loss here. I'm going to lighten up, raise capital, get long. We're going to be in a position at some point in time down the road to say, wow, now we're in an unsustainable uptrend. I'm going to start to scale out, whether I'm using tiered trailing stop loss orders or we break support. I have a static stop in, whatever. And then we begin to reestablish the short position that we took off a couple of weeks ago, a couple of months ago, whenever that happens to be. So I hope I answered your question. All right, moving on here to XLY. XLY is nearing on a weekly time frame, unsustainable overbought levels. This is going to have to pull back. And supposedly it was consumer discretionaries that drove that GDP number that I spoke about earlier. This is 7:06. We're going to go to some chart requests, and we're going to call it a night. All right. So, folks, if you're not currently enrolled in the Bulls and Bear Banter section, our chat room, join up. It's free for now. We'll go to the feed. There's a link below. As a matter of fact, you use the QR code on your screen and sign up on your phone. I do not want your credit card. Just enter your Google information, whatever you want to log in with, and you're in like Flint. And this is where we take the chart requests from. So Bonnie Bean. Hello, Bonnie Bean. CDE would be my symbol. Well, if it's your symbol, we're interested. CDE. Oh, this is going up. I know this company. It's in a sweet spot. Mining is going up. It's going up. It's just going up. China. Look at the W formation here. This is a quarterly chart I'm looking at. Monthly chart. Look at that Bollinger Band squeeze on a monthly time frame. Wow. Nearly a double. Weekly chart. We're overbought here. we're nearing resistance. I would not initiate a new trade, but if you're looking for price targets, I'd be looking at about $8 a share. I think that's where we're going. And then we're probably going to get a bit of a reprieve. I would be a buyer on the pullback. Where might that be? I don't think we're coming all the way back down here. I think where we may come down to here. I think $6 a share. You could be looking at the stock. You can see that 682 is a pivot point. We broke out above it, pulled back, then we got to follow through. So if it breaks down below 682 on a pullback, it's coming down here to $6 a share. I would be a buyer of CDE. CIFR. CIFR. Another mining play. Bonnie Bean killing it tonight. Let's go to the quarterly view. I'm not as bullish on this. I don't know this company. I don't like the quarterly price action here at all. So of the two, CDE is the better bet. Weekly chart, nice little breakout here. I don't like that quarterly chart at all. Daily chart, we're at resistance. It's probably going up higher. I would rather do CDE. I'd rather do BHP Billiton. This one, I know it's a cheapy stock, but I think it's cheap for a reason. So I don't mean on a PE basis. I'm meaning on a dollar basis. So I prefer CDE better. This one could go up, but it could also go down. That quarterly bearish reversal bar is no bueno. I don't like that at all. Now, what if, let's play the what if game. What if we close above $5.89? Then I become a very excited young man. Yes, I said young. Don't make fun of me. So, yeah, I would be a buyer on a breakout above $5.89 per share. Not until then. It's not exciting to me whatsoever. CDE, different story. Silver, we already did, but we can go over it again using TrendSpider. Folks, if you're not using TrendSpider, you're missing an arrow in your quiver. You got to have this. It's a great product. I use it all the time. And silver, you know I'm bullish on silver. We broke out last week, retested this week. I'm more bullish on silver than I am on gold. So I'm a buyer here, very excited about it. I think it goes higher. This is a quarterly chart. Let's go monthly view. Beautiful breakout. Look at all of this resistance as noted by topping action. Gone now. Weekly chart. Continuation breakout. Daily chart. Stalling. This is going to break out higher. Now, when I say stalling, all it's doing is consolidating gains. Let's go intraday view here. Let's go with an hourly chart. It's just consolidating. Just consolidating. I think it goes up. If you have time, TIA. I don't come up with a TIA. Let me make sure I read that right. TIA. Let's try it here. Go here. I'll save that later on. TIA. I don't have anything that comes up for TIA. I'm sorry about that. All right, folks. Oh, Tim. Thanks in advance. All right, gotcha. I didn't get it. All right, folks. Thanks for being here. Have a profitable trading day tomorrow. Have an awesome night. Like, subscribe. You know the deal. And don't forget, TrendSpider. Support the channel. 35% discount code below. And don't forget to join our Bulls and Bear Banter chat room. We have the feed that goes on. Lots of great people, lots of great fun. Join up. It's free. And everybody have, again, an amazing night. Profitable trading day tomorrow. Awesome weekend. Talk to you soon.